Guys, here are 5 stocks that super investor Michale Burry is buying. Stock number 1, Molina Healthcare. He's up about 3%. He has 24,500 shares, current value about $8.6 million, and it occupies, is that 15.1% of his portfolio? Is that what that means? So if you look at the history here, he just bought 25,000 shares basically right here. The stock was at around $100 a share back in 2020, and now he's averaged in about $340 per share. Okay, so let's go check out Molina. Mo, what do you think of Molina as you look at it? Is there anything you see that what do they do first off?
So they offer healthcare plans focused on Medicaid-related solutions for low-income families and individuals. Its health plans are operated by a network of subsidiaries. It's HMO.
So is this a health insurance company?
That's kind of what it seems like.
Because look at this, Mo. Look at this price of free cash flow, 117. Now, the 5-year average is 1.26 billion, but they had a big drop in, ironically, their free cash flow, but net income went up. Okay, so guys, insurance companies have a different way of being valued.
Yeah.
Okay, they're not like a typical company. As you know, Berkshire Hathaway has made a lot of their money by insurance. What they do is they take the float. What that float means is, guys, every time you pay for insurance, no matter what it is, the insurance company believes that they are going to pay out that money. If you pay out $500 a month, they're like, we're going to pay out that money at some point in the future, 100% of it. But in the meantime, we can take that money and invest it and make more. That's how Buffett made his money. It's basically free leverage because he's borrowing money from somebody else in premiums, and then he invests it. And then in the future, when he has to pay it out, he pays it out from the profit of investments. Okay. So I wouldn't just focus here on PE and price of free cash flow. What I would focus here on is understanding insurance companies. If you're in our community, please reach out to Wicked Willie. It's Dalton. He's our in-house analyst. He understands insurance companies a lot better than I do. He is not an expert by any means, but he definitely understands it. A lot of it has to do with return on equity, which very high here, 22%. And also, I think book value. So you're going to want to understand that as time goes on. Look at this company, though. 423 all-time high on March 27th. It got as low as 282 back in July. And I think that's about when he started buying, right? When it was going up from there. So it piqued his interest. He liked it, moved on. Stock number 2, Baidu. This isn't just the only Chinese company he's doing, right, Mo?
No, he's doing several of them.
Yeah, several of them. Internet search engine in China with 84% of the search engine market in September of 2021. Sick. That's really updated information.
Updated stats, guys.
So we have more free cash flow than net income, 3.3 billion versus 2.83, and the 5-year free cash flow, 3.65 versus 2 billion of net income. Mo, look at these price of free cash flows. Single digits.
Attractive.
So what's the reason why?
Yeah.
Well, first off, he added 75,000 shares to his portfolio, and it occupies 11.2% of his portfolio. Let me show you. So if you look right here, here are his transactions back here. Guys, look at this high back here in 2021.
Crazy.
This was a hype stock. Holy cow. It was at $350 a share. Let's go look at that in our software, because our software will tell us exactly. $354 per share back in February of 2021. Since then, the world has absolutely hated on China.
Yes.
Alibaba, Baidu, JD, all these companies being butchered. Why? Because of things that were always issues back here, back during the hype, but now people all of a sudden care. News follows the stock price. Stocks fall. The news that justifies that comes out and gets more accentuated, and people don't focus on the right things. So, Mo, I mean, I look at this and I go, okay, look at the 8 pillars here. Shares outstanding up a little bit, kind of weird, and low ROIC. But look at analyst estimates here, Mo. Yeah, growth.
It's good growth.
Decent growth.
Yeah.
The point is, if it's cheap enough, you don't have to have a lot of growth.
Right.
Revenue growth, not insane, but still great, still decent. Guys, here's my point. I learned a lot about investing by thinking in extremes. When people think, avoid China at all costs, I go, all costs? So if I could buy all of China for $1, would I buy it? Well, of course. Well, that's an extreme statement. Paul, you can't buy China for $1. No, but there's a point from $1 to $100 trillion where it makes sense to buy Chinese companies. That's all a value investor is here to do. That's all Michale Burry is doing here. On the next company, I'll show you why it's part of my portfolio. This is why we look at these things that way. If you're able to change your thought process too, there's a price that's too high for a great thing, and there is a price that's too low for a bad thing, you'll probably do very well as an investor. Somewhere in those two extremes that I mentioned, there's a great price for the company. The hard part is determining what that price is. Why? Because we don't know the future. If I could tell you right now how much money Baidu would make for the next 50 years, we could absolutely make the right decisions, right, Mo?
100%.
If I told you Baidu was going to make $1 billion a year for the rest of the time, you'd be like, okay, if I want to make a 15% return, you put in Excel and it tells you this is exactly the price.
Yep.
But that's why we have the stock analyzer tool, because it allows us to make our estimates about the future. Guys, that's all you're doing as an investor. You're making estimates about the future. The point is to have margin of safety, to have a wide range of estimates. So, Mo, give me some, have we done Baidu in the past?
I believe I have. It's been a while probably, but
I did it back in May of 2023.
yeah, I did it May 24.
So my revenue growth numbers were 4, 7, and 10% over the next 20. I did a 20-year analysis. Let's go down to 10-year analysis because I don't want to have that long. I did 14, 18, and 22% profit margin.
Okay.
Might be a little rich. Can you look at 10 years, about 17? Mm-hmm. Okay. I did the same with free cash flow, even though cash flow is a lot higher. That's why I did that, because the cash flow is higher.
And it's getting better than a decade ago, I guess.
In terms of free cash flow margin.
Cash flow margin.
Correct. PE, I put 15, 17, and 19. Might be high. And I put 12, 4, and 16% desired annual return. But guys, I'm going to change this to 9. And the reason being is that's essentially my intrinsic value. What I want you to do is to put your stock analyzer tool and determine your margin of safety. 9 is not adequate. That's the market return. If you just want 9 or 10%, buy an ETF. So if you want to be able to buy individual stocks, put that margin of safety in here. We hit the analyze button. Guys, stock's at 83. We have a low price of 125, a high price of 360, middle price of 217. Does this mean you should go out and buy Baidu? No. But what it does mean is I think you should go learn more about it. Because whenever you have all greens across the board with these kind of current returns based on current price, I think it deserves a further look. You know, we love our friend Gary Mashuris. He says, I don't understand China, so I'm out of it. I'm meeting Gary next month. You know what I'm going to say to him? Gary, go effing understand China. It's worth your time.
Yeah. Because
there's potentially a lot of potential gains there. Does it mean it's the right thing? No. You have to do your own research. That's why the community is so important. It's because you can get other people's research along the way. To continue on with that, good old Alibaba, stock number 3. Now, this is a company that Mo and I both own. Don't buy any company because I or somebody else owns it. Stock has been all-time high of 320, now at $80 a share. Michale Burry currently has 155,000 shares valued at $12.6 million. Look at these purchases and sales. So he bought, sold out, and then just started buying again as the stock kept going lower and lower and lower. His base is about $80 a share. He's actually showing a negative right now because of today's performance. But Alibaba, guys, this is a company that I think is getting beaten up way too hard. They're the leader in China. Wherever China goes, they will probably go and better. And my guess is they'll probably do more international things. So guys, I keep talking about the community. I keep talking about the software. And you may have noticed if you've been to our website that we only have a limited number of daily spots for our community and software. The reason for that is that the software as it exists today currently includes everything, all the tools we have to offer for retirement, stocks, and real estate, all of these right here. But we now have 4 YouTube channels, and behind the scenes, we're making some really big changes to make the community and software and videos better for you as we continue to expand. These offers right here are going to be separated. And that current offer of everything is going away very soon. Now, you may remember, if you've been watching us for years, that I built this software selfishly for myself so that my team and I could use it to constantly make better decisions in all aspects of my money investing. But we started to get requests in the comments. Paul, how do I get the software? How do I get that software? So we made it available to the public. And our community and channel, as it continues to grow, has grown so much since then that it's becoming less about me and more about how I can better serve you and the community members. Now, the good news is these changes have not been made yet. So if you join today, you'll be grandfathered in for life with all of these tools, plus every future tool we make. You'll also stay in your pricing tier forever. This is the best deal we've ever offered, so if you're serious about making better financial decisions, increasing your returns, and more importantly, sleeping better at night, click on the link in the description below to get access to everything we have to offer before we make these changes. And I'm very confident it'll be the best decision you make this year on investing. So, Mo, we do this company all the time. Look at the analyst estimates. It's not much growth here. It's actually not a lot of growth. I wonder if the analysts are being negative, but who knows?
Yeah.
Because look at the revenue growth. So they have overall EPS growth staying the same, even though Alibaba is buying back shares, decreasing those number of shares outstanding at cheap prices. Because Mo, this freaking company is selling for 10 times free cash flow.
Yeah. It seems like any China company you look at, everything from a financial standpoint looks pretty attractive.
Because everybody's negative on
so
China.
Down.
Exactly.
Because of the country.
Yeah, because of the country.
Not because of the businesses.
So let's look at the stock analyzer and see if it's going to look very similar to Baidu. Mo, how often do you look at BABA?
Rarely ever.
Yeah, because you have a position, I have a position, and I'm just waiting for it to play out. That can take years, and I have to be patient with that. But I did 3%, 6%, and 9% revenue growth. 15%, 19%, and 23% profit margin. Might be a little aggressive, but 17%, 22%, and 27% free cash flow. Also might be aggressive. We'll see. PE, 16, 18, and 20, and a 9% return. Let me beat these down a little bit more. Let me go with 12, 15, and 18. And then let's go with, no, I like 17, 22, and 27 for free cash flow. Hit the analyze button. Guys, it looks a lot like Baidu. Actually, better numbers than before. A low price of 100 to 150, high price of 280 to 430, middle price of 175 to 250. Huge potential returns at today's price of 80 bucks. But again, don't buy it just because of stock analyzer. You have to sit there and make sure you're comfortable with the risks, because my guess is there'll be a lot of volatility with Chinese companies. Stock number 4, Shift4 Payments. Mo, have you ever heard of this company?
Nope.
Provider of integrated payment processing and technology solutions. Nothing can be more generic than that. The company offers software providers a single integration to an end-to-end payments, offering a powerful gateway and a robust suite of, I don't know what that means. Okay, so a couple positives here, Mo. Free cash flow last year, $230 million versus $100 million in net income. Net income over the last 5 years is pretty similar. Okay, a lot of debt here. So I'm already going, for me, I don't know if I agree with this. $5.5 billion in market cap, $7.8 billion enterprise value. That's a lot of difference in debt. Return on equity is good. Damn. Major revenue growth.
The shares outstanding from 2019 have gone from 39 million outstanding to 66 million.
Wow. A lot of X's here that I don't like. 73% increase in the shares outstanding. Wow. Analyst estimates. Big growth in EPS.
Yeah.
But Burry is not a guy who... Burry's not the kind of guy who buys a company and sticks with it for very long periods of time. He's opportunistic. Yeah, he's opportunistic. Remember, he owned GameStop at $4 when nobody owned GameStop. And I don't know when he sold it, but I think it was around $25 or so. Everybody was dead on GameStop. He was the original GameStop hypester. Yeah. Now, it's a new holding for him. He has over 100,000 shares and it makes up 14% of his portfolio. Will he be right or wrong? I don't know. But I look at this company thinking, look at this revenue growth potential. We're talking about, Mo, look at this.
Huge.
38%, 29%, 17%, 38%. I would be okay with this if I understood he's the kind of guy who owns stocks forever. He doesn't.
He doesn't. Proven that over the last several years.
Let's see if this even makes sense to us in Stock Analyzer. Because I know we haven't. Let's do a 5-year analysis. And let's do 10, 20, and 30% revenue growth. Okay. Profit margin. That's the problem. With such low number of years, not much data there. Which one? I don't know. Let's go
258. I don't know.
258. Fine by me. Same with the free cash flow. PE. 15, 18, 21. 15, 18, 21. 9% return. I'm just doing this, guys. Whenever you're stuck on this, put in lower numbers. And if the price is still good for that, then do more detailed research. Analyze button. So for me, look at the low price of 17, high price of, this is way too widespread to me. He sees something and he's a brilliant stock picker.
Yeah.
I don't, for me, I'm like, maybe? This is a wide range here. We're talking about 12 or 13X from the low to the high.
Yeah, that's huge.
To me, the juice isn't worth the squeeze, because I'm looking at this going, your potential return is minus 21%, potential high is 32. I don't know.
Plus the assumptions are really guesses at this point.
Correct.
So it's not even worth going and doing more.
See, and that's what I want you guys
to
to learn from this. I want you guys to realize that there are so many options out there for investing. It's not about forcing it and saying, I got to make this happen. No. If it doesn't make sense to you, if it's too complicated, move on. Stock number 5, Hudson Pacific. New holding, a little over 1 million shares, a little over 1.1 million shares, 11% of his portfolio. Now, guys, this company is down a lot. $5.50 per share, all-time high of $38. Guys, office REIT, office real estate industry. That business has been hit so incredibly tough. Not going to lie to you. I'm going to look into this one, though, because I look at the office industry and think to myself, boy, it's been beat. I mean, we're talking about, Mo, you see it all the time on Instagram. Office building bought for $2 billion in 2018, just sold for $300 million. I mean, literally 10, 20 cents on the dollar.
In like primo locations.
In primo locations. And I look at that point going, at some point, what did I see the other day? Bed Bath & Beyond in Solon went away. They're putting pickleball courts in there.
Oh, wow.
Yeah. It's a great idea. It's like, okay, I also thought to myself, what about data centers? These malls are all going empty.
Yeah.
Why don't we put data centers in there? Because these are empty real estate, but data centers with AI and all these things have a lot of potential. Mm-hmm. You look at, we're having a rent crisis now. We're having a real estate value crisis. These office buildings can be converted into housing and to keep prices a little bit lower. Mm-hmm. So there's a lot of potential there. And whenever you see big drops in prices of assets very quickly, you got to wonder, I want you immediately thinking to yourself, this is what I want you to learn from this channel. When it drops, when it goes up a lot, is it too much? When it drops a lot, is that too much? That's the question I want you asking. I'll go back to 2009 and 10 when I was buying houses in Cleveland. And everybody said, don't buy real estate, especially not in Cleveland. It's toxic. Guys, I was paying, there was one house I bought where I got a check at closing because the house that I paid $1,500 for the house, my tax credit and everything, after all fees, I got a $400 check, I think, at closing. And guess what? I put 30 grand in that house and it rented out for, at that time, $900 or $1,000 a month. And now it rents out for $1,200, $1,300, $1,400 a month. Please don't tell me that was a bad decision. Please don't tell me that real estate is toxic. So I want you to have this framework of thinking that Mo and I have, like, okay, Mo and I are looking at a certain asset now. I'm not going to get into it, but we see these prices fluctuating and we're like, why? And we're asking a lot of questions. Okay, why is this happening? Why is this happening? It's about understanding what other people think. And you got to remember, I don't ask experts because I think they know. I ask experts who are salespeople because I want to see whatever they're saying is probably what their clients are saying to them. So when they're telling me, avoid this, what does it make me think?
I should do that.
I should probably think about it. Exactly. Because the people responsible for selling aren't pushing it. Remember the one asset yesterday? They're like, you're going to have impossible time selling it. I'm like, well, then that tells me I'm going to have a really good time buying it. Exactly.
Get this cheap.
So guys, if you like the way we think, watch this next video, our other super investors video. You're going to love it. Thank you very much for your time.